Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Alibaba Group Holding Limited interim report. Alibaba Group Holding Limited offers a diverse range of businesses and services across various sectors. The company's main offerings include digital retail platforms, Taobao, Tmall, Lazada, Trendyol, Dara's wholesale marketplaces, 1688.com, Alibaba.com global e-commerce platform, AliExpress e-commerce logistics solution, Kaneo on-demand delivery and local services platform, Alemi mobile digital map, navigation, and real-time traffic information, Amap online video platform, Youku entertainment industry services, Damai entertainment cloud computing services, elastic computing, storage, network, security, database, big data, cloud native, Alibaba Cloud Model Studio hardware, software license and installation, application development and maintenance services, membership packages and subscriptions, retail platforms, Freshippo groceries and goods, Alibaba Health medical and healthcare solutions, mobile games, Linksy games information service platforms, UC browser, Quark online travel platform, Fliggy collaboration workplace and enterprise management platform, DingTalk. Alibaba stock price skyrockets. Key drivers behind the surge over the past year. Alibaba's stock price has experienced a remarkable 77.79% increase, driven by several key news events that have contributed to its substantial rise. The company's strong Q3 FY 2025 earnings and analyst confidence in AI-driven growth were major catalysts, with analysts raising their price targets after beating consensus estimates. The Chinese government's reaffirmation of its 2025 economic growth target also positively impacted investor sentiment for e-commerce giants like Alibaba. Additionally, the company's robust growth in December 2024 quarter, including a 9% increase in customer management revenue and a 13% rise in cloud revenue, further boosted investor confidence. Alibaba's plans to significantly ramp up AI spending beyond its original target of $50 billion, as well as its partnership with NVIDIA to build cutting-edge AI infrastructure, sent the stock soaring. The company's advancements in homegrown AI chips and speculations surrounding founder Jack Ma's increased involvement also fueled investor optimism. The combination of these factors has driven Alibaba's stock price upward, making it one of the top performers in the market over the past year. The primary drivers of revenue growth or decline can be identified from the financial summary provided. On one hand, several business segments have contributed to significant revenue growth. These include Alibaba China E-commerce Group with a plus 12.8% growth, Quick Commerce with a plus 37.1% growth, International Commerce Retail with a plus 14.5% growth, Cloud Intelligence Group with a plus 30.2% growth, Customer Management Services with a plus 12.1% growth, Cloud Services with a plus 27.5% growth, and Logistics Services with a plus 13.7% growth. On the other hand, there are also segments that have led to revenue decline. These include sales of goods with a minus 20.2% decline and an all others category with a minus 26.6% decline. The significant growth in certain business segments has been offset by the decline in these areas, resulting in overall revenue growth. Net income for the company decreased by 7% year-over-year, YoY, from RMB 67,569 million in 2024 to RMB 62,994 million in 2025. This decline is also reflected in a decrease of 43% in net income, from RMB 71,235 million to RMB 40,353 million. Profit margins also saw significant changes, with operating margin decreasing from 15% to 8%, and adjusted EBITDA margin dropping from 21% to 13%. The primary reason for these declines was a decrease in adjusted EBITDA. However, the company's investment in quick commerce, user experiences, and technology partly offset this decline. The net income margin decrease is not specified, but non-GAAP diluted earnings per share decreased by 39%, from RMB 3.94 to RMB 0.39. Similarly, non-GAAP diluted earnings per ADS/share also dropped by 39%, from RMB 31.5 to RMB 19.1. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from 2024 and 2025 shows that the company has successfully maintained a surplus in its operating cash flow, with amounts of RMB 65,074 and RMB 30,771 respectively. This trend suggests a stable financial position for the company. The company's debt level has undergone significant changes in recent years. Initially, the total debts increased from 1.14x to 1.69x of adjusted EBITDA ratio, page 23. However, this trend was reversed as the total liabilities decreased from RMB 772.095 billion to RMB 714.121 billion, page 49, and further reduced to US $3.33 billion in September 2025, page 70. The debt level reduction is also reflected in the decrease of total debts from US $4 billion to US $3.17 billion in January 2025. In terms of interest expenses, there has been a notable increase. Interest expense attributable to convertible unsecured senior notes increased by RMB 48 million, page 62, and overall interest expenses rose from $4,615 million, 2024, to $5,836 million, 2025, page 79. Additionally, interest expenses increased by RM 1,279 million for the 6 months ended September 30, 2025 compared to the previous period, page 56. Overall, both debt level and interest expenses have changed significantly, indicating a shift in the company's financial position. The financial performance of various segments and regions within the company has been mixed. On a positive note, Alibaba's International Digital Commerce Group, Cloud Intelligence Group, Quick Commerce Business, and China Commerce Wholesale Business have shown strong growth, with notable increases in revenue and adjusted EBITDA. However, some areas have underperformed. The Alibaba China E-commerce Group saw a significant decline in adjusted EBITDA of 47%, while the All Others category experienced a decrease in revenue and an increase in adjusted EBITDA loss. Management is optimistic about the company's future growth, driven by strategic investments in quick commerce, user experiences, and technology. Key areas of focus include customer growth, innovation, and strengthening cloud infrastructure capabilities. The company is also expanding its international commerce operations through operational investments. Management aims to manage risk through hedging instruments and optimize capital structure, positioning the company for long-term success. Acquisitions and divestitures overview. Alibaba Group has made significant moves through acquisitions and divestitures to shape its business landscape. Key acquisitions include the strategic combination of Taobao and Tmall Group into Alibaba China E-commerce Group, and the integration of Alemi and Fliggy into the same group. On the other hand, the company has also undergone notable divestitures. The disposal of Sun Art and In Time businesses marked a significant shift in its retail strategy. Additionally, the sale of an 85% equity interest in Trendyol Geo for approximately $0.7 billion further highlights Alibaba's efforts to optimize its portfolio. These transactions demonstrate Alibaba's adaptability and willingness to adjust its business structure to stay competitive in the rapidly evolving e-commerce market. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company declared significant amounts in 2024 and 2025, totaling RMB 29,340 million and RMB 34.047 billion respectively. Additionally, it repurchased and retired a substantial number of shares, with 1,027,554,280 ordinary shares being retired in 2024 alone. The company's share buyback program continued into 2025, with RMB 72,889 worth of shares being repurchased that year. That concludes the financial summary for Alibaba Group Holding Limited. Feel free to comment below, and I will be happy to answer them when possible.